Hello students, welcome to today's session on balance sheet profile formats under schedule 3. So in my earlier video I had talked about different types of statements which are prepared by the companies as per the Companies Act of 2013 schedule 3. Okay. So now let me give you an idea about the balance sheet format. All right. So students, as you can see, this is the entire format of the balance sheet as per Schedule 3 of the Companies Act. Okay. Now, as you can see from this, number one, if you remember earlier, we used to have that T format of balance sheet, right? Now, that T format is no more used. We use this modern format. And according to Schedule 3, obviously, you have to, the companies need to report figures of 2 years, that is figures as at the end of the current reporting period and figures as at the end of previous reporting period for the for better comparison period. Now, why this previous reporting period? Because it is considered, assume that the figures which are at the end of previous reporting period are same as in the beginning of the current reporting period. So, with this format, the companies are able to showcase the figures at the beginning of the current accounting period or reporting period and at the end of current reporting period, right? In order so as to showcase their performance, their profitability, their wealth, everything. Now let's talk about these what all are the heads under this. Now, as you can see, earlier in the T period format, we used to have equities and liabilities on the left side and assets on the right hand side. But here in this format, we have equities and liabilities followed by assets. Okay. Now let's understand what all are these. All right. So as you can see from this balance sheet, the equities and liabilities side of the balance sheet has the first thing that is shown here is the shareholders funds. Shareholders funds comprise of three things, that is share capital, reserves and surpluses, and money received against share warrants. Okay. Share capital is what? Share capital basically is the first thing which is being shown in the liability side of the balance sheet, right? And this would consist of items like authorized capital of the company, then issued capital, equity shares and preference shares, and subscribed capital, less calls in arrears and forfeited shares. We have already talked about in earlier videos. Then we have reserves and surpluses. So as per schedule 4, it consists number 1, the capital reserve, number 2, capital redemption reserve, number 3, security premium reserve, number 4, other reserves less debit balance of profit and loss account. Then this would also comprise of surplus credit balance of profit and loss account, any proposed additions to the capital, and the sinking fund. Okay, then this share capital would also, this, then, yeah. Then this would also comprise of debenture secured loans like debentures or loans and advances from the bank, as well as the unsecured loans like fixed deposits or loans and advances from subsidiaries. Okay, right. So these two basically make the non-current liabilities, that is long-term borrowings. Then we have current liabilities. Current liabilities comprise of short-term borrowings, trade payables, other current liabilities, short-term provisions. Okay. Now, so yeah, and so as you can see here, according to again Schedule 3 of the Companies Act of 2013, now they, instead of using the terms balance payable uh, and bills payable and bills receivable, we use the term trade payables and trade receivables. Okay. Now we talk about assets. Okay. So assets uh, is divided into two parts. That is fixed assets, uh, or you can say the non-current assets and current assets. Okay. So under non-current assets, we have fixed assets, which comprises of tangible assets, intangible assets. Tangible assets like the fixtures, like plant and building, machinery, equipment, automobile, if there is any in the name of the company, basically all those fixed assets which can be seen, touched, or felt by your hands, that is tangible asset. Intangible assets basically comprise of the goodwill, patent, right? Then capital work in progress. You know, when you make, not now, yes, of course, when you go to the higher classes and you are required to make the cost, or you'll be studying cost accounting, right? There you will study this, that when the company undertakes certain such projects which do not complete in one financial year, one accounting year. So obviously the financial statements cannot be made or cannot be shown as closed at the end of the current financial year, right? Therefore, whatever capital, therefore we show this capital work in progress, that is the capital required for those projects which are continuing over more than one accounting year. Okay, similarly, we have intangible assets under development. Then we have some non-current investments. Okay. Non-current investments like investment in shares. A company can buy the shares or debentures of other companies or bonds of other companies. This is non-current investment, right? And yeah, so these are also to be shown separately in the balance sheet. Apart from this, then we have current assets. Current assets are those assets which are converted into cash within an operating cycle, right? For example, cash and cash equivalents, stock, debtors, these are all current assets. Okay. So, yeah. So we have covered, I've told you about this format of balance sheet under Schedule 3 of Companies Act of 2013. Right? So that's all for today's session, students. I hope you all understood this topic. Keep practicing. I'll see you the next time. If you have any doubts, please contact me through my Urban Pro profile. Thank you.